Welcome, folks. Hump Day Real Estate with Kendell. And we have the lovely Miss Laura here again from Nations Lending. Miss Laura, what's the topic we're going to talk about today is VA loans, correct?
We are going to talk about how we can help our veterans get into housing with this special VA loan that they earned with their service. So thank you to all the veterans. And this is a great loan only for a veteran. So that's awesome.
Awesome, awesome, awesome. So the first question I have, and you don't have to answer right away because I do have a few of them.
Okay.
It's up to you. Does a VA loan require perfect credit score?
Actually, no, a VA loan does not require a perfect credit score. And in fact, we just got fantastic news that we can do credit scores into the 500s.
Wow.
On a VA loan and an FHA loan. We were requiring a 620, but now we're going down into the 500s. So wow. No, they do not require perfect credit. But for people that I see things that can repair their credit easily, I will definitely work with them and give them some homework, what to do, step by step, how to get it done, and then coach them through that process and get their credit score raised. Because it definitely will help them to have better credit. So, but I can help them with that. But no, they don't have to have perfect credit.
Now I know with FHA having the lower credit score requirements, there's more contemplating factors that take place in with the FHA. Is it the same thing with the VA buyer, especially since they're 100% financing?
No, they don't have, they still can do the 100% financing. It's not a special thing with the credit, but you do have to meet their reserve requirement on a VA loan, and we can talk about that.
Gotcha.
But most lenders will stop at a 640 credit score or 620, and we're going to go down into the 500s and help people get into housing. Because there's a lot of people that have lower credit scores that had credit issues and they just haven't been able to raise up their score, but it's kind of something that happened in the past that's still dragging with them. So we want to be able to help them out.
Yeah, I was just wondering, like I've seen where scores are under 580 or something, and then you can still get pre-approval, but you might need to put 10% down. So I didn't know if whether for VA, were there any other contemplating factors, although that program is 100%.
I believe it's still 100%. It literally, I found out about it this morning. Okay. Or late last night, so I don't have all the particulars. So when we circle back around and in the future, and I'll definitely post about it, but I don't have all the particulars on that. I know with FHA, you have to put, there's a level 580 to 600. You have to put your own money 5%, and I think below the 600, I think you were right with the 10%. I'm not sure how they're doing yet because they didn't roll out. They just told us about it. So, and I thought that was so exciting news. I wanted to share.
Gotcha. We appreciate that.
Because we can get the particulars.
Right.
But,
okay.
If somebody's out there that has been stopped before, like call us. Let's get you started. We'll work it out for you.
That's right. Sometimes we can't hold the water, right?
That's right. We got to share it. Got to share it out there, and then we'll get the fine details and make it happen.
Gotcha. All right, so the next one is a big one. Are the VA appraisals a nightmare?
They are not a nightmare. There's a lot of myths around the VA appraisal. I think it is very beneficial for the agent to really look at the property and kind of pick out the things that are likely to come about. VA is very persnickety about handrails. That's like one of their buzz things. So if you have steps even out in the yard, you need to put a handrail on, or like the steps to the basement needs a handrail. That's just like one of the things that comes up. If you have an old deck that has the space between the railings is pretty wide, that might need to be fixed. Or something that is very rickety looking, peeling paint. But those things, a lot of them can be fixed and then have the appraiser come out. Yep. So we just like look at that and try to get it corrected up front. But the other little tricky thing with a VA appraisal is that we order the appraisal through the Veterans Administration and then they assign the appraiser. So there's like another little gap of time.
Gotcha.
And they have 2 full weeks to complete their appraisal, and we cannot bother them. We have to let them have their time. Now, most of them come back before that, but if one's moving a little bit slower, honestly, we are not allowed to start going after them or bugging them until after that 2-week mark. So they got a couple little quirks, but I haven't found them over the years to be that onerous. Most of them come back just like a regular appraisal does. But, there's those couple little quirky things, adding handrails is something that comes up. And I think it's a nice safeguard, health and safety hazards that they watch out a little bit more. But I don't think that people should be afraid of them, or that listing agents should act like they're going to have any severe problems.
Gotcha. So are veterans guaranteed a pre-approval?
Nobody is guaranteed a pre-approval. We are not in the guarantee business, but I will guarantee you that I will work extra special hard to get things the way they need to be to get an approval. So, gotcha. But we can't guarantee loan approval, but we can guarantee that we're going to really work and do our due diligence. And I do a lot of upfront work, make sure that things that can be tidied up and made better, that we do that work first and then present the file to the underwriter so that we have a really good shot. But VA loans have a lot of flexibility that other loans don't. I've gotten through much higher debt to income ratios. If you have a cooperative seller, the seller can help pay off some of the veterans' debts to help them qualify, like if a tax lien comes up or whatever it is. If the seller can do that and is willing to, we have a lot of flexibility that way to help get that veteran into the house and get them, to be a property owner. So there's a lot of flexibility in the VA underwriting that other loan products, there's no other loan product that allows like a seller to pay off debt so that the person would qualify, just the VA loan.
Gotcha. Okay.
There's a lot of great things there that are very helpful. Also, they don't have the mortgage insurance. There's no monthly mortgage insurance, so they literally can qualify for more because they don't have that expense with the loan. So that's a great thing. And, that can be several $100s, several $100s can be $50,000 in sales price. So,
okay.
So they can buy a little more house because they don't have that monthly mortgage insurance expense.
Gotcha.
So gotcha. The feature of the VA loan.
Okay.
Phone is ringing.
Okay. So I'm a veteran and I have bankruptcy and foreclosure on my credit report. Can I get a VA loan? Can I still get pre-approval somehow?
You have to have some seasoning on those big events.
Okay.
And I know definitely for sure that bankruptcy is 1 year.
Okay. Look
up the foreclosure. It's either 1 year. See if I can do this and not look funny and still keep talking. So you have to have some seasoning on those big events. And we also have to look to see what's the foreclosure on a VA loan. If it was on a VA loan, we need to pull the report to see if any balance was owed to the VA. If there was a balance owed to the VA, that eats up some of the veterans' eligibility, and we'll have to calculate whether they have enough eligibility left to buy the house they want to buy. So that if it wasn't a VA loan, we don't have to do all that. But if it was a VA loan that they had that stance happen, then we have extra steps to take and extra calculations to make.
Gotcha.
So we really have to look into that carefully, and we would definitely do all of that. And that will come up on the, I'm not gonna be able to put my hands on that. I thought I had it handy. I thought I saw it today. It's not coming up. So definitely we'll look into those circumstances and get that information so that we can help the veteran getting into their new home. And hopefully they've reestablished some credit and, you know, kind of back on track with their finances, and you know, their current credit is good and they have a pretty decent credit score. So those are the things that would come about from that circumstance.
Gotcha.
That's a great question, but it's not impossible. I had one a couple months back, and they had something from the like 1990 or something. It did take the VA a couple weeks to dig up the paperwork, but we made the calculation and they were still able to buy. So
nice.
So we did get that done for them.
Nice. So those are the questions I have. You had a little something more for us?
Oh yeah, I do. I just wanted to talk about I can do maybe.
Oh, I gotta give you the
permission. So one of the things that you have to find out the veterans entitlement, and that will we get that through their certificate of eligibility. So if they have their DD 214, which is their discharge paper, we can order their certificate of eligibility for them. And that will give us the paperwork that we need for the VA loan.
Yep.
And will also show if they have any disability. If they have a disability of 10% or more, then they are exempt from the VA funding fee. And the VA funding fee is added on top of the loan amount. It's financed into the loan. And that's how the Veterans Administration insures the loan to protect the lender against loss. So, but they don't have the monthly fee like an FHA loan does. They just have that VA funding fee. But for somebody that has that at least 10% disability, and that shows up on their certificate of eligibility, and they would know it anyways, the veteran knows it. But then they are exempt from that fee. So that's an extra savings that they get to using that VA loan. And it's surprising how many veterans don't use their VA eligibility, but they really should, because it's a fantastic loan. And it's one of the few loans that requires no down payment, even up to like in Montgomery County, Maryland, you can go up to a $970,000 loan, which is the high balance county loan limit.
Gotcha.
But you can buy into the over $1 million range, because when you want to buy a jumbo loan and you use your VA, you make a down payment between the gap between the sales price and the county loan limit. So it would be about $80,000 if you bought $1,050,000 house in, like, say, Washington, D.C., you would only have to put 25% of that 80, so like a $20,000 down payment. Hope I did my math right, but it's 25% of the gap between the sales price and the county loan limit. So 25% of about 80,000. So it's a really great loan. There's no other loan that would give you that kind of purchasing power.
Gotcha. Do you see that share screen at the bottom? If you put your cursor down there, does it pop up?
Hold on, I'm trying to, well, maybe it's under the more.
There might be under
Share
the more.
screen. Host disabled participant screen sharing.
Let's see this. I'll just change the status on it. Let's see what happens.
Okay. Sometimes you get a little glitches and we just have to keep on going. It's okay.
Yep.
Hang with us, everybody. We're gonna keep sharing with you all the great benefits. You earn them as a veteran, do all the hard work, and you earn this great product. Should I try again? All right, awesome. There we go. Can you see that?
Not yet.
No? Oh, that was me.
There you go.
Okay. So I just thought I would run through a couple things. We don't need all of this. So eligibility, this is just a term specific to VA loans, and it just means the veteran has met the basic criteria that's appropriate, because they have to have a certain length of service and a character of the service to get that get their veterans benefits. So it just depends on where they were in wartime, peacetime, how long did they stay in service.
Okay.
But these are things that are on their DD 214 and certificate of eligibility that gives them this information. And like I said, we will get that for them or help them get it.
Okay.
So so interest, these are just myths about VA loans, that interest rates are higher. They're not higher. They're just a market interest rate. They're usually around the same rate as an FHA loan. And right now, FHA, conventional, and VA are pretty close to one another. Underwriting is not harder on a VA loan at all. It's definitely has a lot more flexibility and nuance to it than any other loan program. They're super easy to refinance. So if you bought now and rates come down, you can refinance without any qualifying. It's basically sign some paperwork and go to settlement.
Wow.
The VA loans do not cost the seller any money. That's old school stuff. There were some fees that the seller paid, but that's not any longer. And they don't take longer to close. So you can close a VA loan in 30 days, just like an FHA loan, all day long. So there's really nothing for anybody to be worried about when they're looking at a VA loan, whether you're the listing agent or you have your buyer's agent and it's your first veteran that you've ever worked with. Just let's be grateful. On the appraisal, you had asked me a little bit about that. Our underwriters have their training and their certifications to underwrite the actual VA appraisal, and they give a notice of value. That's what it's called, and it's called a LAP approval is what they have, and not all lenders underwriters have that LAP approval. So sometimes it would take that type of lender a little bit longer because they would actually have to send the appraisal to the VA to get the appraisal underwritten. But we do that in-house, so we don't have any of that time gap that maybe you were referring to a little bit a while ago.
Gotcha.
Interest rates are definitely set by the market. They're whatever is going on in the market, that is where interest rates will be. So, and this is very important. This is just the graph of how much the funding fee is going to be. If you're putting down 0 to 4.99% and it's your first time use, you've never used your VA eligibility before, the funding fee would be 2.1%. So 2.15% of the loan amount. But if you're using it for the second or the third or fourth time, you're going to pay 3.3%. So the funding fee just goes up a little bit if it's your subsequent use. But if you're putting down some money on a loan, then the funding fee goes down. And like I said, if you're a qualified disabled veteran, then your funding fee is 0. So that's just the chart that we use to figure out what your funding fee is going to be.
Okay.
And these are just the forms. That's so just wanted to see if there was, I have an example. This is what the certificate of eligibility looks like. We just fill out this form for a request for the certificate, and most of the time we get them back in like an hour. So it's very, very simple. We use their no, I wanted to show you this one. I think it is. The subsistence and clothing allowances and some of their other allowances as their total income. And this is all on their LES, on what it's comparable to a paycheck stub, but they call it the LES.
Gotcha.
So we use, because the VA breaks down their types of income. That's like for an active duty person. So, and active duty, they do get a verification of the duty from their supervisor. So just a little extra verification that we get. But the other little nook and cranny of a VA loan is you have to have this residual income, and it comes off of an income chart. So this was just an example of how it's calculated. But we literally take the gross income, we subtract out the federal and state taxes, we subtract out their monthly obligations for their debts. We put in a utility calculation for how much the utilities on the new house are going to cost, and any like child care and their future mortgage payment. And we subtract that out of their gross. And as long as this net residual income meets the chart, we just look it on a chart, how many people are in the family, then that's a check mark, and then we're good to go as far as the VA loan. So we run it through automated underwriting, we get loan approval, or we're doing a manual underwrite, and then we do this residual income calculation, then they're good to go. Even if they've had high ratios. So it's a very basic loan. I mean, there's not a lot of fanciness to it or difficulty, but it's just a great loan for the veteran, because with no monthly mortgage insurance, which is a huge expense, and with more flexible ratios and more flexible credit, it's a great loan for the veteran to use and get into their first house or their subsequent house. So I'm going to stop sharing, but I wanted to show you an example, if I can, of just to compare. Sorry, this has to open up so I can get back in. Okay. That might not be possible. More great.
What, you trying to go back?
Yeah. I'm trying to get back to the screen where I can do the share, or take it off the screen share so I can share different things. Hi, now. I'm sorry. When I go to the screen sharing, then it like shrinks down where the, okay, we're talking. Well, I can just tell you, on an FHA loan at $350,000, the total payment was, and this is at 6% interest rate or 7.126 APR for 30 years. The total estimated payment was $2,710. But for the same loan, the VA payment was only $2,550. So that's $155 less per month for the veteran for the same loan versus an FHA loan.
Wow.
So that's a big savings. $155 a month is quite a bit of money just to compare the VA loan against an FHA loan.
You said you wanted to stop sharing, right?
Okay. You want me to show that screen?
If you want to.
Okay. Do that. Here we go. Share. So here's our FHA loan, the estimated payment, and here's our VA loan, the estimated payment. So it's $154 difference, plus the cash to close, down payment, closing costs, and escrow accounts for the FHA loan would be almost 30,000. It would only be 17,700 for the VA loan.
Gotcha.
So they have no down payment, but they have closing costs and their escrow accounts. Escrow accounts are the property taxes and the home insurance. So that's quite a bit of savings. And then I showed you can match up the VA loan with the Maryland mortgage program, and they would virtually need nothing out of pocket.
Wow, that's real good.
So they can do, I can match up that VA loan with no down payment, get the closing costs from the Maryland mortgage program, and they'll need almost nothing out of pocket.
And that's really awesome.
That's really awesome. Now,
is.
the Maryland mortgage program, the difference is they set the interest rate on the government loan for when you're using their program to get that closing costs or payment assistance. But other than that, you have nothing out of pocket.
Yeah, but that's still worth it, right? Because FHA, even the FHA mortgage payment is still almost $9 higher than the person's coming with less money in FHA, 29,000. Yeah, wow, that's awesome.
So that's really exciting. And I have a veteran that's out looking because she was going to wait and save. And I was like, but I can couple it with the Maryland mortgage program and you don't have to wait. So why wait? Because we know that rates are continuing to climb up and housing prices are still going up a little bit. Maybe they've in some areas stabilized. You can speak to that, but you know, why wait and let rates go up and not even another %? You know, get in now and use that that down payment assistance. I would say the only thing they have to have is their earnest money deposit. You know that when they write the contract, that's their good faith money that they're putting up front. But in this case, they would get that back at settlement if it wasn't used.
Yep.
So that's awesome. Like literally getting in with almost nothing out of their pocket.
Nothing out of pocket. So one of the things is there opportunity for a widowed VA veteran, so that let's say the veteran passed. I believe there's a if that person was like the 10% or something like that, that veteran, that widow can still use the VA loan.
I believe that there's some stipulations to that, the circumstances, but I believe they have to have been killed during a time of war. I think that is the stipulation. Gotcha. But I can definitely check into it. But yes, in certain, there's a couple of certain
circumstances
that but if they were, because some veterans were veterans, but they weren't during like an active time of war. So I don't think that counts, but I believe if it was like during a, like Korean War, you know, the Vietnam War, then we have Afghanistan and all that, then they would be eligible to use that VA benefit.
Gotcha. Well, before we go, let's talk real estate crash. Is the housing market going to crash? What do you think? I'll tell you what I think after you tell me.
Okay. I believe that we are not having a bubble. We're not bursting a real estate bubble like in 2008. I think we had a real estate boom. I think we had a real estate boom based on Economics 101, supply and demand. There was a short supply and a lot of demand. Now rates have tampered back some of that demand because some people with the higher rates don't qualify for what they want to buy anymore. But I believe that we're just going to take the curve instead of keep like going up. We're gonna like little crest and flatten out a little bit. But I don't believe we're bursting. I do not think it's a bubble. There's not a lot of foreclosures. There's not short sales. People have lots of equity in their house. So I think we might be going into a more normal market, but I do not see a real estate burst or
I 100%. I 100% agree with you. I believe that from 2019 being one of the strongest markets in a decade, and then we get this spike of the bubble, as you mentioned. We're tapering off back to the 2019. So 2019, the sales are about 5.3 million. Right now, in 2022, as of April, the sales are like 5.6 million. So I think, just like you said, we're in a correction back to the normal from a spike from an economic situation, whether it was the pandemic causing people to go out and buy houses because they saw that hey, that house was too small and all this other stuff that was causing the spike in folks that wanted to buy homes.
And also, some people just weren't in the market for a long while for a whole bunch of reasons, and and then COVID hit and you're stuck in your house, so there was a lot of pent up demand.
Mm-hmm.
And that demand just came out like
and was trending,
and that caused a boom. We had a boom, and a boom is fine. We're good with booms, like and now we're just gonna be more normal. We have more normal interest rates. Interest rates in the 5s and the low 6s are normal.
Yeah,
that's normal. The Fed kept interest rates artificially low for over
a
12
decade.
years.
Yeah. Over a decade.
And now, at some point you got to stop the artificials, but we literally had a boom based on good, solid economics 101, supply and demand. And there's none of the crazy that was going on that caused the actual bust that we had in 2008. So I still believe in real estate. I think it's a great investment, but it's not just an investment to, your house is going to go up and you're going to make all this money. It's an investment in your family. It's an investment in your security. There's all sorts of intangible reasons to have a house for your family, create memories. Every time you make a payment, you're building equity. So you're paying your mortgage, not your landlord's mortgage. You have management and control over your environment because it's yours. You can create how you want. It builds stable communities. So real estate is king. It's important. It's important to families. It's important to communities. And I still say, I bought in. Everybody that has bought in the last couple of years has got a big smile on their face. So it's still safe to get in. My first house, I think I said last time, I bought at 11%. And I was still happy that I was buying a house.
And you got the reward from when you bought that house because you sold and you got some money from it, and then you went and bought another house.
I got a little bit of money because we didn't stay too long, and I bought my second house at 9 3/8 and made a little bit on that, and then I bought, so I kept parlaying it up and up and up. So get in the market. You can't win a race if you don't start the race, if you don't get in, and just get in your house and enjoy it, because it's going to be better than renting.
Let me throw another little thing out there. So I talked to my son yesterday, and he lives down in Orlando, and he asked me, he said, what do you do? How do you find out how these different people, what they do for a living, especially when you see them in a nice car and stuff, right? So I said, look, all I do is I go up to them, I say, hey, what a person got to do to get something like that? And sometimes they tell you, they might wave you off and just say, stay focused, or sacrifice or something like that. So I asked the guy yesterday, and he texted me back today and said, man, the guy said, well, my parent passed away and house sold, and he basically paid cash for a new Tesla. So, you know, those are things that come out of real estate. You know, it won't be as much of a guarantee coming out of the stock market, because you never know what happens with that and how that stuff has to be split up and dealt with in order to you know, pass that whatever they have left over to all your heads and all that stuff. So
yeah, because if you're taking care of your house and you know you're doing the maintenance and the repairs and you're keeping it clean and you're updating it over the years that you live in it, then and you're making your payment, that house is worth a lot. It has land and it has the structure, and you're keeping that. That's worth a big chunk of change, like when you retire and you're downsizing or something.
Yep.
You know, and you're paying an equal amount. Like the average rent in our area is now, I think, $2,100.
Mm-hmm.
So that's a lot of purchasing power. We saw this FHA VA loan at $350,000, and your payment on the VA was $2,500.
Yep.
It's not like you're renting a 1-bedroom apartment for $2,100, or you can buy a nice townhouse, depending on where you're looking. That's a lot more room than that 1-bedroom apartment, and it's going to be yours every time you make that payment.
You got that right. You got that right. So it looks like we're running out of time on this thing. But look, you want to give them your information and how to contact you, or you want to slide to the left and show them. There you go.
There you go. Laura.fournier, Nations Lending, your lender for life. We make home lending human. And I'll be here from the start. We even service our loans, so it will just be me, not an 800 number that you're calling. And I have a great team behind me, but Nations Lending is a fantastic company, and my team is over the top wonderful. And working with Marcellus is awesome. He takes fabulous care of every buyer.
Appreciate that.
We're a good team, and we will definitely take care of you veterans that we love, and we appreciate what you do for us.
Laura, I appreciate your time, and hopefully some folks get this message and reach out and try to get some more information. Hump Day Real Estate with Kendell. Again, we appreciate you. You guys have a blessed one.
Have a blessed evening. Thank you.